One. Hello, everyone. I am joined with Yazan, and the title of this video is "We're trying to find the recession." So I'm gonna try to have Yazan help me find the recession. Thanks, Yazan, for joining me.
Thank you for having me. This is actually hilarious because you and I spoke quite a lot about this, and it's funny because at the start of 2013, 23, sorry, everyone was talking about recession, and every person on CNBC, on Bloomberg, on FinTwit, they're all adamant that S&P is going to 3,000 or 3,200. Those were the magical numbers, and that we definitely are going to go to a recession. And one of the things that was very eye-opening is, again, if you go with the consensus, you never win. It's the same story. It's the reason why Warren Buffett makes so much money is that he doesn't listen to the puppets. He's on his own lane. So when with that narrative, they used obviously regional banks, and it made a lot of sense. Regional banks were failing, and they said, okay, well, this is going to be worse than 2020, 2008. In 2008 we lost Lehman, and look what happened afterwards. We lost Silicon Valley Bank, and then First Republic, and then they said it's on. It's the same story, same narrative. It's that same story, and then suddenly, fast forward to March, April 2023, the AI craze started, and OpenAI has started being kind of the new new storyline, and everyone wants to be part of AI. And Nvidia was the only
So
chip
hold on a
maker.
second. We went from pictures of monkeys now to AI.
AI, absolutely. And if you're not part of the AI craze, and the funniest part is the narratives don't change. 1999, 2000, so the dot-com bubble, 2020, 2021, the crypto bubble, whatever you want to call it, or NFTs. The narrative does not change. People have to own it. They don't care what it's valued. And the main thing that they keep saying on CNBC or Bloomberg or whatever is, who cares about valuations? Didn't you hear that like a million times? Who cares about valuation? Which like is an oxymoron. Um, but then they started saying, well, you know what? This is just like an isolated event. So we've got 7 stocks that are leading the pack. It's the Apples, it's the Nvidia, it's Microsoft, it's Google, but it's not the rest of the market. You know, and that imagine this: we've got $5.5 trillion of money parked in money markets, the highest amount of cash sitting in money markets ever, and these guys
Waiting,
are
waiting,
earning.
waiting for the recession, right?
Yeah, because everyone knows it's coming. It's like you ask your plumber, you ask your financial advisor. They all are financial advisors, and CNBC is the main puppeteers. Like they're like, no, we're going to a recession. There's no way. I mean, the how many times did you hear the inverted yield curve? How many? Uh, We've never seen an inverted yield curve without a recession. Now, just for context, we are not here to say we could be in a recession in 6 months. I have no clue. The point that we're trying to make is the recession is made, or recessions happen when no one expects them. When everyone is talking about them, doesn't work. If you're all protective, it doesn't work. Now here we are, okay, and then The next thing that happened is, oh, 7 stocks. That's it. That's all that's driving the market. It doesn't matter. And the breadth is bad, and Russell is so lagging. And unless we start seeing, there's no way Russell is going to go up. How would Russell companies go up? Because these companies lose money. We're just going to about to talk about an example to make it more fun in a second, but so Russell suddenly started participating, and today Russell, I know it's up probably 1.5% or something. Yeah, 1%. It's up almost few percent since the bottom, and guess what? It's likely to continue. So the same companies that are, loss making are now making a comeback. And we laughed about it the other day. We were talking about Kavana because you and I talked about Kavana back in October, with the same business model, same amount of debt. They still have $8 billion of debt. They still have, um, the same crappy business where margins are very low, and they have a dispensary of cars. That's what they have. Dispensaries of cars
And they're
everywhere.
the first quarter, they lost they lost like almost $300 million from operations, something like
But
that. Yeah.
yeah, but what drove them from a $4.70 in October to almost 40 some yesterday, $40 some? That's almost like 9x, no? Yeah, like we all would like to have a 9x on our stocks, but what drove it is short. It was a massive short squeeze, and then the same. What I laugh is always the same story. The analysts that were called this um, a great business at $300 and gave it a 350 or $400 targets, and then slashed it all the way down to zero. And then the same analyst came back with a straight face, not worrying, and saying, you know what, it should be worth $50. Like it's insanity. It's literally like I don't know what to make of it. But
And
what what
I was thinking, and we talked about it the other day. It's like there's so much information out there, so much teachings from Warren Buffett, Charlie Munger, all the other greats, and like they haven't learned anything. Like I mean, in general, they haven't learned anything. There's these guys are almost 100 years old. They've been teaching for 2 or 3 of our lifetimes, and we still haven't learned shit as a society.
Well, I mean, because if you wanna, unfortunately, like let's be real. Our generation, where do they get their information? They go on TikTok. They go on social media. They go to YouTube, and if all the headlines are like the recession, the recession, the recession, you know, give me how do these businesses work or are worth anything in an environment of 6%, 6% interest rate or 5%. I mean, it is an oxymoron, but the reality is the market is always forward looking. And what happened is very simple. The Fed can say whatever they want to say. They always manage their narrative the way they want. This is the same. These are the same people. I don't know why people are so surprised. These are the same people that said there's no inflation. Then they moved to inflation is transitory. Then they said inflation is sticky, or inflation is starting. And then they said inflation is sticky and it's not going to go away forever. Like your kids are going to see inflation. My grandkids are going to see it. And, then now inflation is starting to cool off. So would I be surprised that if they suddenly, because of the most recent reads like CPI at 3%. Like, what are they gonna justify the higher interest rates at? We know we want to cool the economy. Why? The small and medium-sized businesses are suffering. The business, not we're not talking about the stock market. We're talking about businesses are actually like the average person trying to get a mortgage or refinance. Where are they going to get that money from? So that's the problem. And I was actually reading an article that was interesting, saying that how much the additional interest results in inflation, because you have to bear a higher amount of payments on your home, on your business loans and the like, that it has to kind of find itself down the pipe to the products. So essentially you can't have it both ways. And
So
today,
you're saying that they're fighting inflation, but their higher interest rate is creating it.
yeah, so you can't, so it's like, how do you finish this? And the other thing is, like, if we take a step back, they were fighting for a very long time about debt ceiling, right? Like, no, we don't want to raise the debt ceiling, blah blah. Let's take a step back. When you have 30 plus trillion dollars of debt, what's the you tell me, what's 30 trillion times 5%?
Well, times 10% is 3 trillion, so 1.5 trillion.
So you have a carrying cost of the US debt at $1.5 trillion. Is that sustainable on an annual basis? No way. It's not. So they have to slash it. No matter what they say, they can say whatever they want, but they have to trim it. It doesn't matter. Now, in a month, 2 months, whatever, 6 months, they have to. And the market is seeing through it. The market's forward looking, is seeing through it, and that's why we're seeing the start of the market rally in the Russell even. So what I think is happening here is the following, and I don't want your followers to say, okay, well, he's diverting so much from, Fox, Duro, so on. Why is he talking about these? Because they matter. So the reality is the following. Every money manager out there is trying to make alpha. It doesn't matter which side of the aisle, US, Canada, Europe, Middle East, everyone's trying to make an alpha. So guess what? What happens to all of these that missed the boat on the first run of the year? What happens to all these fund managers? They have to make it up somewhere. And they know that chasing right now, Nvidia, Microsoft, so on, they're not going to make 40%. How are they going to sit with their clients and say, hey guys, the index is up 30% if you were in NASDAQ, or 15 if you're in S&P, but we're down, we made you 5%, which was the money market. Like, no one's going to accept it. They'll fire them. They'll move on. They'll take their money somewhere else. So what happens is that money is going to find itself down the path to somewhere else. And where that somewhere else is, we started seeing it now in Russell. And I think Russell, and I've always said to you and to your audience, if you want to see where are we at in the cycle of liquidity, always look at Bitcoin, Coinbase, and Tesla. That's all you need to do. Every morning before I get up, I see those three, and that tells me what is the state of the market. Risk on or risk off. If you're seeing Bitcoin starting to kind of move up, and Tesla and Coinbase, you know for sure that people are taking on risk because they need to make alpha somewhere. So now we go back to, you know, as I said, like Nirvana, nothing has changed, but the valuation has. The business, nothing has changed. So let's talk about Voxer. Voxer, what were the issues in the business ending of the year? We had the receivable issue, which has been resolved. We now have a first majeure matter, which has to do with the, with the financials that resulted in tripping off BMO and BMO saying we'd like to kind of get paid sooner. So this kind of created a lot of emotional selling. Everyone's like selling because they think the business is worth nothing. And that's not true. If you like, you've spent so many hours talking to everyone there. The sum of parts in that business is worth way more than the business itself. Where sorry, is worth significantly more than what the valuation is currently at. So, what will happen if they get the financials out? They already raised some money through MCE, and they're going to raise and some others. I suspect they're going to raise a bit more. And as Gary mentioned, and then what happens if they, are able to sell some of the lower margin assets, as Gary said? Then suddenly they've cleaned the debt. The business is sound. It's growing. Maybe it didn't grow as fast as we all wanted to, but it's not different. It's not very different than Carvana. If anything, I would argue that they're in a better position than Carvana. They just sit on an exchange that is not very liquid. But all my pretense before was to say that that is likely to change. The TSX Venture, the OTC market, the CSC are likely to start seeing a pulse. The question is when, because someone out there needs to make alpha. A fund manager has to make some return for their clients. The same thing we talked about. Do you have anything on Voxer before I move on to something else?
You were talking about the sum of the parts. That we had like a 2-hour call
Yeah,
with Gary and Al Qureshi, because you are a member of MCE, and
yeah.
they were walking us through. It was just mind blowing how much Blue Water improved since it was acquired by Voxter. I mean, I was just blown away. They added this, they added new products, they expanded this, they expanded that. And then I was thinking to myself, when Voxter acquired it, somebody wanted to pay $150 million for Blue Water. There was an offer on the table for Blue Water before Blue Water expanded from just MSRs to whole loans, seconds, before adding the valuation piece to it. I mean, today, Blue Water, somebody could be making an offer for 300 million for it, or 250, and yet you look at the valuation between market cap and debt of BMO together, it still doesn't add up to the 150 that somebody was offering just a few months ago.
Well, this is why I think that gap is going to close. But I also think the gap is going to close because once you close those check marks, everyone wants to play. They have to play because they have to make up an alpha, as I said. So, and this is the best businesses, as we gave the example with Carvana, the best businesses to make a big comeback are those businesses that are so hated. They're such hated businesses that suddenly when they come back with vengeance. And that's what we are betting is going to happen. Because right now, this company is priced that it's going to zero. That's what the market is saying. They're not going to meet their deadline with the financials. They're not going to meet their deadline with BMO. They're not going to show any. People are expecting, because real estate transactions are down, that revenue is going to be declining, and most likely margins are going to be declining, and most likely they made a bigger loss. So guess what? We're days away from seeing the financials. Knock on wood, because this is not something that you, me, can control. We're shareholders. So we know that by the 17th, based on the latest update that's provided by the company, they should be putting out their financials. If the financials come out and they show even a flat revenue, not even growing, flat revenue, and margins are relatively stable, and they get the issue of BMO resolved, what is the bear thesis then?
Yeah,
I don't know.
and also during the environment that you said, what's the Fed going to do with interest rates? And if the Fed is going to not raise them anymore, what's going to happen to the transactions? So now Voxter added more clients, more services, more products, and now transactions are going to go up.
Exactly. So the same logic could be applied, and you and I have spoken about this maybe 20 times, about Aduro, Pure Cycle, so on. And I want to take a step back and remind everyone. Back in December, or I think in November, you and I did an interview about how mispriced Aduro is. And that was when Pure Cycle was like 900 million US in market cap. And Aduro was like 40 million US. Aduro is up maybe 10% from the time. Pure Cycle is about 100% up. Pure Cycle is sitting at a 1.9 billion US dollars right now. Nothing changed fundamentally, except they did one run on their factory. That's it. They showed that they can run the factory for one run, and they showed the end product. The factory is not operational yet, mind you. So they're not revenue generating yet, although they said they would be by now. But anyway, so Pure Cycle is now up to a $1.9 billion. We have said several times there are so many limitations to Pure Cycle. Not to undermine what they do. They have a plant. They're backed up, but they have debt. All their eggs are in one basket. It's one plant, and they've sunk in about 600-700 million US dollars, and they have debt on that. So, and they use the cream of the crop of one type of plastic, which is polyethylene. And then on the other side, there's been significant milestones that happened on Enduro. From them operating R2 finally, and they're running polymers. Okay, maybe people want to see the process. Do they believe it? I don't know. I'm just wondering. The fact that they opened a second hub in Europe, right at at where Brightlands is, where all the main names, the Sabex, all the big names are there, and that's what they do. They produce polymers of different types, and Aduro is able to take care of the parts that no one wants to take care of. The 80% of waste plastic that no one wants to touch, because they can't. It's not because they don't want to. Their technologies don't allow them to. So, here we're at. They've raised money. They've raised 5.5, 5.4 or $3 million. So they've checked the box on execution. Valuation is up 10%. Why? Because there's no liquidity, or because there's what? There's a looming recession, and no one's going to be able to raise money, and all these valuations are going to be cut in half. Well, again, you can't have it both ways. Like, it just does not work that way. So here we are with two great examples, Voxer and Enduro, massive disconnect, and we'll leave it to the audience to decide.
All right, I think it's a good time to stop here. Both of us, we're gonna go separate ways, and we're gonna keep looking for that recession. So if you find it, just let me know.
I sure will. Thank you so much, Ramesh. Have a good one.